communications contributor. Would you like to open your mic to do a quick test? Thank you.
Testing.
Brilliant. We can hear you clearly. Next, we would like to invite our co-founder of Timeswap, Amit and
Hey
Mimi.
guys.
Hi.
Hey guys.
And
Great to be here.
Awesome. How many guest speakers are here today from Timeswap? Thank you.
It's just the two of us. It's me, Amit, and then there is Mimi.
Okay, so both of you are sharing this account, right? Okay.
No, I'm in this account, in a different account.
Oh, okay. Cool. Okay, I see both of you right now. Okay, awesome. Thank you for letting me know that. And next, we would like to invite the product lead of Vaultka, Eric, to test your mic. Thank you.
Yeah, great to be here.
Brilliant. Yes, we could hear you clearly. And following, we also have two guest speakers. They are Karapika and Alex from FactorDAO, their co-founder and BDD.
Hey everyone, thank you for having us.
Hi. So, may I ask if we have two guest speakers from the FactorDAO account? Okay.
Yeah. Hi, I'm here.
Oh,
Nice
okay.
to meet you.
Yeah,
Thanks for having me.
over here. Awesome. Great. So yeah, later for projects that have two representatives, you can decide who will answer the question first and who would share additional information, as an add-ons. Thank you so much. And during today's Twitter space, the duration will be around 60 to 90 minutes. And each of teams will be asked about 3 questions. First, we are going to starting from the guest introduction, team background, and then we're going to go to each of your question list. And at the end, we'll ask you about important milestones or recent events and roadmaps as a wrap-up. And now we're going to welcome everyone, all our audience and guest speakers, as well as hosts to today's OKX Web3 Twitter space. Our topic today is building better DeFi, exploring the Arbitrum ecosystem. And our guest speakers are from GMX, Vaultka, Timeswap, and FactorDAO. They're all amazing Web3 builders at the Arbitrum ecosystem. This is Moonlight, your host, and I would like to starting from GMX, asking our GMX communications contributor, Johns, to introduce yourself and the project to us. Thank you.
Thank you, Moonlight, and thanks everyone for joining us today on this Arbitrum Twitter space. My name is Jonesy. I am one of the communications contributors helping coordinate the business communications for the GMX exchange in the backside. My presence has been, I've been involved for a little under a year now, and GMX has been around for about a year and a half on Arbitrum, as some of you may be familiar. We are a decentralized perpetual exchange. Let me start at the very beginning. So we are an on-chain exchange offering perpetual swaps as well as spot swaps, but focused on perpetual futures. Live on Arbitrum, live on Avalanche as well, but today our focus will be on Arbitrum. And we've grown a lot over the last year and a half, and have managed to attract a lot of users, volume, liquidity. I'm sure we'll be able to delve into that a bit more. But let me first give the microphone to my friends and colleagues who are here from the other leading Arbitrum protocols.
Thank you so much, Jonesy, for sharing the introduction to us about GMX. And next, we are going to invite our guest speakers from Timeswap, Amit and Mimi, to introduce yourself, your role at the project. Also, let us know more about the Timeswap project. Thank you.
Hey guys, thank you for having us. This is Amit, one of the co-founders of Timeswap. And yeah, very excited to be here alongside all the amazing builders from the Arbitrum ecosystem, John Z and Vaultka, FactorDAO team. Great to be here, and thank you for hosting us the OKX team. So coming to my background, I predominantly been in crypto since early 2017. Mostly been through the previous cycle as a investor trader, and then like during the DeFi summer, essentially got involved into like all the DeFi protocols, and essentially gave me like conviction that like DeFi is probably one of the breakout applications for blockchains. And essentially I quit my fintech job and like jumped full time into crypto with the launch of Timeswap in like late 2020. So it's been a couple of years that we've been building this product. And yeah, today we're live across Arbitrum, Polygon, and Ethereum. And our version 2 just went live on Arbitrum like a couple of months ago. So yeah, excited to be here. Just giving a background about Timeswap. So Timeswap is essentially a fully decentralized lending borrowing protocol. Like when we started Timeswap, our goal was that, okay, like during the DeFi summer, we saw that Uniswap, how it enabled the permissionless exchange of assets, but we felt there wasn't any fully decentralized lending borrowing protocols. I mean, there were protocols that were doing some parts of it permissionlessly, but it wasn't fully decentralized. So our vision was that, okay, we want to build a Uniswap-like lending borrowing protocol. And today, yeah, our protocol works on a 3-variable AMM, and it's currently, it is a fully Oracle-less design, which basically means we can list any assets in a completely permissionless manner. And it provides, let's say, fixed let's say, income loans and lending, lending opportunities for users. And like the greatest example is that like we work with the Plutus team in Arbitrum and launched a PLS R pool for which there was no secondary liquidity, but essentially being a fully Oracle-less platform, we're able to provide, let's say, safe lending and borrowing for that asset. So yeah, excited to like speak more about like Timeswap and like speak with other builders from the Arbitrum ecosystem.
Thank you so much, Amit, for joining us today. And Mimi, would you like to add any additional information? And also please introduce yourself as well. Thank you.
Sure. Amit covered all grounds, so I'll just be talking more about myself. So I'm Mimi, and I'm part of the growth team here in Timeswap. Basically, I handle partnerships, marketing, and any integrations with Timeswap. And yeah, that's pretty much it from our profile. Excited to do the rest of the space.
Glad to have you here as well. And we also wanted to ask our audience kindly helping us to share this Twitter Space link through your profile and to other social media platforms so more audience can join us and learn more about these amazing Arbitrum projects. And next, we're going to invite our guest speakers from the FactorDAO. They are Kurapika, co-founder of FactorDAO, and Alex Beatley of FactorDAO. Who would like to go first to introduce yourself and also introduce FactorDAO to us? Thank you.
Wonderful. So thank you, Moonlight, for having us. First of all, my name is Kurapika. I'm the co-founder and lead ops in Factor. I have been working in fintech for over a decade now and came into crypto in 2016 by creating and founding an analysis platform to really create another layer of risk management on top of the investment platforms and the ICOs that were back at the time. Went into advise and contribute to several protocols since, and been working on Factor for the past year now. And just to give a quick overview, Factor as the platform is the front end of DeFi and a liquidity management layer. What it practically means is that we created a composable element for all the different DeFi protocols, or you can look at it as building blocks. And any strategist or protocol or individual can create a variety of complex strategies just without a no-code platform and directly distributed to all the different chains and liquidity layers on top of all the integrations. And for the liquidity side, anyone that has capital can now go and get exposure to a variety of actively managed strategies, including ones that are built on top of GMX in a one-click element, including a layer of risk management on top. Alex, do you want to add anything and also tell a bit about yourself?
Yeah, no.
Oh, I'm not sure if it's my connection or.
Yeah, I think he dropped. Yeah, so let's continue and
Sure thing. Thank you so much. And also, Alex, if you cannot, for some reasons you are disconnected, feel free to quickly leave this space and then join us pretty soon, and then you will be connected again. Next, we're going to invite our product lead, Eric from Vaultka, to introduce yourself and also introduce Vaultka, the project, to us. Thank you.
Sure. Hi, everyone. Thank you for Gala and Monica for making this happen, and happy to share about the DeFi landscape with other reputable DeFi projects on Arbitrum. So I'm Eric. I'm the product lead of Vaultka, and my background will be from trading, and I gradually shift to a PM role into a DeFi PM role. So let me talk about Vaultka. Vaultka is a yield protocol that specializes in providing different perpetual DEX LP strategies. And we are the catalyst of the perpetual DEX, such as GMAs, Gains Networks, Fairlight Exchange, and etc. And we aim to accelerate the usage of perpetual DEX. And how do we do so? Is to provide value-added strategies to our users, such as leverage strategies, market-neutral strategies, and to provide more stable liquidity to decentralized perpetual market. Also, we want to provide a convenient, hassle-free, and one-click strategies for our users' LP tokens. There are lots of many nuances, such as withdrawal time and window, dynamic fee charge, ES token vesting, and all this will be handled by our teams. Moreover, we have our risk management tools, fee score, to evaluate the liquidity, interest, and exposure of different perp DEX, and to visualize the risk to our users intuitively. So we aim to provide a better service and product to our users on Arbitrum chain. And great to be here.
Welcome, Eric, to today's Twitter Space, and everyone. Those are our guest speakers' introduction. Please follow them, follow their projects, so when there are additional information being shared through Twitter, you're going to receive the notifications firsthand. And next, we're going to go to our list of questions to each our guest speakers and their projects. First, we'd like to go to John Z, asking what is GMX composability in the Arbitrum ecosystem? Thank you.
Thanks for that question, because it's an important question. Composability is a very important characteristic for GMX. The perpetual exchange has been constructed in such a way to make sure that all the modules are indeed composable, and that many other projects are able to build on the foundation that GMX has laid. So that includes our trading module. It also includes our liquidity system, GLP, which some of the audience may be familiar with. Excuse my voice. I'm recovering from a week of COVID, so I haven't had the best week. So occasionally I may be a little bit difficult to hear, but I'm going to do my best to make myself completely understandable. So we have a lot of different teams building on GMX. I have to admit the exact count is hard to keep up with, because new ones introduce themselves every week. But I think we're currently up to about between 80 and 100 integrations of GMX, and about 70 projects building on GMX. Many of those are Vault solutions, such as Vaultka just mentioned. GLP offers a very interesting composable Lego brick to build on, because GLP has a lot of liquidity available and offers excellent yield in terms of the fees that the GMX exchange generates. So we've seen countless projects building on GLP. We've seen exchange aggregators integrate with our trading module. We've seen additional decentralized front ends for GMX come up. So there have been countless ways in which teams of builders have integrated with GMX and tried to further expand the functionality we're able to offer. When it comes to GMX itself, we, as I mentioned, we're a decentralized perpetual exchange. and which basically means we attempt to offer the ideal on-chain trading experience. Perpetuals are a great instrument in that regard. They've become quite famous in crypto as a form of futures that has no expiration date and is thereby quite straightforward and easy. An instrument for speculation, of course, but one that has become quite prominent in crypto, popularized by BitMEX back in the days. Now, GMX has managed to become quite big in that field, offers more than 500 million in liquidity nowadays, in just a few key assets that are tradable on the exchange, BTC, ETH, and a handful of other leading cryptos like Chainlink token, Uniswap token, and Avalanche token. So with just a few assets available, the exchanges managed to grow quite big, offer a lot for traders, and offer very deep liquidity. Now we're in the process of launching our version 2 of GMX, and that's something we've been working on for a long time now, a little under a year, with the devs doing incredible work in realizing that. Version 2 will be able to offer a lot more assets for trading and come with some other essential improvements to the trading experience. We can talk about that a little bit more later. But to stick with the topic of the GMX ecosystem for now, as I mentioned, many projects integrated with us, and that's also been a core focus of GMX from the moment we launched on Arbitrum, which was exactly on the same day when Arbitrum itself launched. So we managed to really broaden the liquidity that's available on Arbitrum, build out the ecosystem, the DeFi ecosystem that's slowly over the last year and a half developed on Arbitrum. And it's really our goal to also offer the deepest liquidity for native tokens on Arbitrum and see this DeFi ecosystem continue to expand. Because a lot of the DeFi promise that started on Ethereum with, let's say, DeFi summer in 2020, sparked a lot of hype, created tremendous expectations, and then ran into the natural limitations of gas usage on Ethereum and the difficulties that came with that. To a large extent, I believe Arbitrum is the solution to that, and roll-ups in general are an important element of the solution. And we're seeing that solution now slowly becoming a reality on Arbitrum, seeing an ever-expanding DeFi ecosystem, interesting Lego blocks that interconnect and build an impressive structure together. And that's what GMX is going to be focused on, further building out that ecosystem together with our collaborators. And I really look forward to seeing where we stand in a year or two. And I expect Arbitrum will then be a DeFi powerhouse, even more than it already is currently.
Thank you very much, John Z, for your time introducing complexity of GMX in the Arbitrum ecosystem, and also take care of yourself. Thank you for joining us even though you didn't feel well. And next we're going to bring the question to Timeswap. Amit and Mimi, how is Timeswap different from your typical lending market, and also how can users benefit from such differences? Thank you so much.
Yep, thank you. Yeah, great question. I think like I mentioned in the introduction, the key design principles of Timeswap is that we essentially provide fixed maturity, fixed income, let's say, lending, borrowing services. So some ways in which we are different, I'll explain from a user perspective and also from, let's say, a design perspective. I'll start with design because I think one of the core issues that we wanted to, let's say, fix was how do we permissionlessly scale, let's say, lending, borrowing in DeFi. If you look at most of the DeFi protocols in lending, borrowing today, only a few assets can be listed on these protocols, predominantly because a lending borrowing protocol needs a safe and secure oracle that cannot be manipulated. So today, in most of the lending borrowing protocols, you'll see about 10 to 20 assets that can be listed as collateral. Now, obviously, many protocols have tried in the past to expand this, let's say, list to long tail assets. And you've seen over the last couple of years, there have been countless oracle manipulation hacks where oracles are manipulated and like protocols are left with bad debt. So we wanted to fix this from a design perspective. And that's one of the key differences, is that we don't use an oracle at Timeswap. So it's a completely self-sufficient protocol that works exactly like Uniswap, but instead of exchanging assets, you can do permissionless lending and borrowing for, let's say, any asset out there. So that's like fundamentally in a design perspective, how we are different from other lending borrowing protocols. From a user perspective, it's predominantly the fixed maturity plus fixed income. Now, what I mean is that many of the current lending borrowing protocols, you'll see that, hey, you can earn, like suddenly there is a spike in yield, let's say 70% APY. So typically what happens is immediately after that, let's say people enter the pool, but then let's say a whale enters the pool and pushes down the APR. So essentially your earnings or APY as a lender is not fixed. Similarly for a borrower also, let's say you entered a pool when the yields are, let's say 5%, you're paying 5%, but let's say there is suddenly a spike in demand and now you end up paying, let's say 70% APR on your borrow. So this obviously leads to lower predictability for long-term loans. At Timeswap, essentially your yields are locked. Whatever yield you lock in when you enter the pool, that stays locked in for the entire duration. So you don't have to worry about, let's say, your yields being, let's say, taken away by somebody who comes after you, or let's say you having to pay higher yield than what you entered into the pool. This is one of the key differences. Another is that the loans in Timeswap are non-liquidatable. Essentially, you can safely leverage up without worrying about your health factor or collateralization, because we work on a non-liquidatable model where the liquidation essentially happens on maturity when a borrower decides to default. So there is no interim, let's say, impact of the token's volatility on your position. So you can essentially borrow and forget and never have to, let's say, worry about getting liquidated. So these are a couple of interesting design choices, which essentially separates us from all the other money markets out there. And we do believe this enables a different kind of, let's say, additional utility for all the, let's say wonderful assets that are, let's say, not possible today to be listed on the most common lending borrowing protocol. So that's like some of the ways in which like they're different from other lending borrowing protocols.
Thank you so much, Amit, for sharing the information about Timeswap, how it is different from other lending markets, and how can users benefit from these kind of differences. And next, we're going to ask if Mimi would like to add any additional information.
No, I think what Amit mentioned regarding the differences of our design and the typical lending market, we're all grounds again.
Sure, thank you so much. Next, we're going to bring the question to Eric. He's the product lead of Vaultka. We wanted to know, why is Vaultka decide to build on the Arbitrum chain? Thank you.
Sure. As you guys may know, Vaultka is an Arbitrum maxi. So Arbitrum is really indeed the performance chain of Ethereum. And as Josie has mentioned, is like the powerhouse of DeFi. It's definitely a great place for DeFi projects. Low latency, higher throughput would be great for different projects. And there's a sufficient amount of DeFi protocols that Vaultka can interact with each other. And we can therefore create much more strategies, such as we can create strategies with GMX, such as we can create strategies with FactorDAO, such as we can create strategies with Timeswap. There are lots of possibility and strategies that can benefit our users. And therefore, we can create a great ecosystem on Arbitrum chain. So, moreover, we also witnessed that there are many perpetual DEX are listed on Arbitrum and deployed on Arbitrum. The trading volume is great here, and we can enable our users to capture that growth and activities. And our team recognized there's lots of demand for the LP management, and that's why we are joining the Arbitrum family to capture the growth and provide a great product to our users on Arbitrum.
Thank you so much, Eric, for sharing the reasons why Vaultka chose to build on the Arbitrum chain. And next, we're going to bring the questions to our FactorDAO's guest speakers, Kurapika, co-founder, and also Alex, BD lead. We wanted to know what problem is Factor trying to solve. Thank you.
Thank you for the question. Yeah, and I want to touch about what Jonesy mentioned firstly about composability. And I think what Factor is trying to solve here by being the front end for DeFi is that simplification or the accessibility for all the different strategies and the great yield DeFi knows how to generate. The problem right now, it's really siloed or distributed among very much different and diverse amount of protocols doing different strategies, from active management to passive management to building on top of different protocols. And I think, you know what, we can actually touch about GLP for a minute, because as Jonesy mentioned, many different protocols are now building on top of GMX and concluding all of their strategy upon the GLP asset. So what Factor allows or solves is to create another layer or another building block by taking this GLP and connected with dozens and dozens and other integrations like Vaultka, like many other protocols, which Alex can elaborate in a second, and really allow the building blocks or creating complex strategies that were just not available before. So instead of going and creating a full protocol just to build on top of GLP, you can now create this composable asset and combine it with other features within Factor and just, practically speaking, launch a protocol which has a vault in it. It has a token that bears the yield, and of course distributed among the depositors according to the performance of the strategy. And this is, I guess, an overview. And Alex, I'd be happy for you to first elaborate. And of course, if you have some view from your business side for the partners, that would be also great.
Yeah, no, I mean, I think you covered that pretty well, and I guess we're going to get into like the partner side of it and in a bit, right? So yeah, nothing to add on that particular question.
Brilliant. Thank you so much, everyone, for answering the round one question. We're going to go to our next round. Over here, we also wanted to encourage all the audience helping us to share today's Twitter Space link through your personal Twitter handle or to other social media platforms, so more audience can join us today. Also, this Twitter Space is being recorded, which means everyone can listen to the replay over and over again. So join us. And next, we're going to come back to Zhang Zi from GMX. He's the communications contributor over there. So now we also wanted to learn about how does GMX plan to grow your project within the Arbitrum ecosystem. Thank you.
Thanks, Moonlight. We've touched on it a little bit already when I addressed the issue of composability a minute ago. But I think what's important for GMX is that from the very get-go, we've been looking to not just build our own on-chain exchange that offers an excellent trading experience, but also to build out a network of projects integrating with the exchange. So this is taking place on Arbitrum. It has also taken place on Avalanche, where GMX has also deployed. But that's really the goal, to facilitate and help foster an ecosystem around the GMX exchange. So our approach has been collaborative from the very beginning. We've reached out to many good teams of builders that were looking to also deploy on Arbitrum. And from the start, I've been working together with them to figure out solutions for the problems that exist in DeFi, and to figure out how together we can come up with attractive opportunities for users to help really expand the DeFi ecosystem on Arbitrum. And that long-term vision is what still guides us. So it's very much a collaborative approach. And when you ask the question, how do we plan to grow our project, that has really been the approach that has helped us grow tremendously over the last year and a half. If you look at how volume has expanded on GMX steadily, how liquidity has deepened on GMX steadily, it has been a long-term process of diligent, slow, secure growth. And in terms of TVL and in terms of the liquidity available in GLP, there's been a steady rising upward trend. And I think that building together with other great protocols and other good teams of builders helps facilitate that, because the bonds get stronger, those protocols lock up parts of GLP or add on functionality to our GMX modules, and thereby make it even stronger. In a sense, create a bigger moat, which makes GMX as an exchange even more robust, ensures that we are here for the long term. And that's really our vision, to help create Arbitrum as a DeFi powerhouse together for the long term. So we've also worked with Off-Chain to help realize that vision, Off-Chain being the team behind Arbitrum, for those of you who aren't aware. And that's why we work with so many different teams integrating us. And as we progress to the version 2 upgrade of GMX, which is in the works and coming in the next weeks, we expect to be on testnet in a couple of weeks, and then on mainnet probably just a few weeks after some additional testing and security checks. That will become an even more prominent theme once again, because when you start up an on-chain perpetuals exchange, you're always faced with the conundrum of how to bootstrap liquidity. To attract liquidity, you need traders. To attract traders, you need liquidity. That very quickly becomes a catch-22. And I think our GLP model did a great job in solving that dilemma to an extent, and show that it was possible to bootstrap sufficient liquidity for an on-chain exchange fairly quick, if you provide the right incentives and if you provide the right emphasis on security, which is so important for liquidity providers, because if you give your funds and deploy them to a protocol, basically put them in the hands of a DeFi protocol, then you want to be sure that you're in good hands, and you want to be sure that your safety and security is being taken care of. I think that faith in GMX has grown over the months, over the last year and a half, and I think that further reinforces that sense of a moat and of a well-established protocol where you can safely deploy your funds. Now with V2 coming up, and V2 will offer isolated pools, so many more assets, pools that will need to bootstrap liquidity once again, but this time not through a simplistic, easily accessible GLP model, but through a slightly more complicated model with isolated pools, so isolated risk. We again face that question of how do we attract sufficient liquidity. Now, I think as a brand name, GMX has shown that it cares about its liquidity providers and takes their security incredibly seriously, prioritizes it. So I think that plays a big part in let's say, the message of GMX, and I hope that will help us also attract liquidity to the new pools. And on the other hand, it's also about the protocols we work with and how they facilitate easy access to our pools, develop instruments on top of these pools to make it easy for people to contribute liquidity and generate good yields. So there are a lot of elements when it comes to the question of how do you properly and professionally grow a project. But I think that over the last year and a half, GMX has proven its worth in that regard, and we look forward to doing the same in the coming year as we roll out version 2 and further optimize the on-chain trading experience for users.
Thank you so much, Zian. We're also looking forward to seeing the GMX project keep growing in the Arbitrum ecosystem. And next, we are going to bring the question to Timeswap's Amit and Mimi. How is Timeswap playing the prep DEX narratives? Thank you.
Yeah, thank you. I think great question. I think Jonesy just highlighted how like we have two base assets in the GMX ecosystem that today has earned a lot of trust based on how it has performed over the last year and a half or so. I think the liquidity, the users, etc., are a testament to that. And I think overall, obviously, I think perpetual exchanges, I guess today has the strongest product market fit of, let's say, any product in DeFi. I mean, we just saw the announcement from Coinbase a couple of hours ago that they are launching a perpetual exchange. So obviously, I think it's imperative that we have strong decentralized perpetual exchanges on chain as well. And I think it's great to see that the adoption that's been happening. And for us, I think the way we look at this was, like I mentioned a couple of in the earlier question, that fundamentally where we add value is that we're able to provide, let's say, non-liquidatable leverage or liquidity to, let's say, existing token holders, or let's say if, let's say, token holders wants to earn a yield, we can permissionally create pools for them. So for us, like when we're looking at like either GMX or GLP, we're looking at, okay, today there is so many great teams building, let's say, vaults to, let's say, earn yield on, let's say, GMX, or let's say abstracting the complexity for regular users. We see different delta neutral, let's say, vaults being built. So we're looking at, okay, where do we fit in? I think when we're looking at, let's say, GMX and GLP, like we saw that, okay, there is a potential to provide, let's say, liquidity for, let's say, some sort of long-term GMX holders who probably, let's say, need some liquidity, but are not looking at the, let's say, the staking yield. So they can, let's say, probably utilize Timeswap for, let's say, some sort of yield, or let's say for some sort of liquidity. Same to, let's say, GLP, right? So let's say somebody has, let's say, added liquidity in GLP vault, and let's say they want to leverage it, so they can possibly use like a leverage loop strategy. So looking at different ways in which we can help the overall, let's say, on-chain perpetual DEX ecosystem. Very strongly bullish, and yeah, looking to work with all the other teams as well. I'll also like pass on the mic to my colleague Mimi to like share some thoughts on this.
Yeah, so we covered a lot in that short time, but just to reiterate what Timeswap is, basically thanks to our Oracle's design, we're able to list any ERC20 tokens, both for lending and borrowing. And so we've been exploring the perp DAX space for quite some time, talking with several perp DAXs, and especially like what Jonesy said, there's a lot of projects building on top of GMX GLP. So we've also been in touch with those, let's say, second layer products. And we're utilizing the fact that due to our model where we don't need deep liquidity in the DAXs for us to create a lending market for those tokens. So we're able to cater to those long tail assets. For example, if there was a token that could represent the delta neutral traders PNL of GMX, and if we were to create a lending market for it, then it's essentially a prediction market where people could lend or borrow based on their prediction or conviction whether the GMX traders PNL will go up or down without any exposure to the underlying assets, which is Bitcoin, Ethereum, etc. And so yeah, we've been in talks with all these projects, and stay tuned for the coming weeks or even months, because it'll be TT from our side. We'll be dropping more and more pools, especially around the perp DAX narrative.
Thank you so much, Mimi and Amit. We both are growth and also co-founder of Timeswap, for sharing the answers with us. And next, we're going to bring the question to Eric, the product lead of Vaultka. We want to ask, how will Vaultka capture the opportunities of prep DEX? Thank you.
Yes, thank you. I think the keyword of what we are discussing would be composability. So I think Vaultka as a new protocol are well positioned to capture the value like introduced by like different prep DEX. the perp DEX introduce a lot of liquidity, like such as GMX, Gains Network, and Vaultka can capture the value from those perpetual DEX and for our users by providing different value-added strategies. Also, like Timeswap providing like permissionless lending would be a great strategy for Vaultka as well. So Vaultka is well positioned to capture the opportunity of perpetual DEX, and moreover, Vaultka is a proactive team that actively sourcing and developing different strategies from different perpetual DEX such as GMX, Gains Networks, Value Exchange, MUX, Cap Finance, and we are all in touch and having a lot of conversations with those perp DEX, and we aim to provide our users such product in a very timely manner that they can capture the growth and the opportunity of such perpetual DEX instead of just waiting for like other yield platforms to develop in the very long development life cycle. However, we also like really pay attention to security, as Jonesy have mentioned, and security is what we are like paying a lot of attention to, especially in this like current time. We have do a lot of auditing, and we understand that auditing is a continuous process, and we will do more and more internal, external risk management and assessment for ourselves as well. And moreover, we offer a spectrum of strategies that suits different appetite for our users. Currently, we only provide market neutral and leverage strategies, and yet the feedback is quite positive. Our Vault strategies are almost fully subscribed, and we will be gradually increasing the cap in order to to protect our users from any incidents. And moreover, we provide a very low performance fee, which will be encouraging fee structures that is accessible to users compared to other yield projects. And eventually, we aim to become a one-stop platform for all perp DEX LP, and to become more user-friendly by being a one-stop platform. And lastly, we aim to extend Vaultka with different use cases such as lending, trading, market neutral, and etc. with composability. So we do a lot of partnership to create use case for our users. And we just aim to capture all the growth and opportunity from different perpetual DEX and to provide to our users. Thank you.
Thank you so much, Eric, for sharing how Vaultka capture the opportunities of prep DEX and also covering the composability. Also, next we are going to bring the question to FactorDAO's co-founder Kurapika and BD lead Alex. What is the route to market, and why have you partnered with so many different protocols? Thank you.
Yeah, so excuse me. Yeah, I can take that one. So yeah, I think like Kurapika originally described, we're trying to create this middleware infrastructure so that there's a kind of no-code modular platform that enables the creation of any kind of strategy. So ultimately, we do want that to be permissionless so that anyone can use that, whether it's an on-chain fund, a protocol, a DAO to manage their treasury, or just any individual that wants to set up and manage their own DeFi strategies and portfolio. But in order to do that, and in order to give the flexibility, we obviously need to integrate, integrate with a number of protocols, because we effectively would use their products as building blocks. We'd use their products as building blocks. So that could be, GLP directly, or, we're partnered also with Vaultka to integrate their strategies. So from our perspective, the more protocols that we can integrate with, then the more options you have for strategy creation. So it's good for us and good for generating totally unique structured products or strategies. It's good for our users because they're going to have a very diverse array of yield opportunities on the platform to choose from. But it's also good for all the protocols that we're working with, because it effectively creates an easy way for a new use case for their products or a new type of strategy that can be created using their products. it obviously creates, as we hopefully grow our user base and expand our user base, it creates a new route to market and a new set of users that will get exposure to their products. And then ultimately, it'll drive TVL into their protocols as well, because once people deposit into our vaults, the vault contracts are executing the strategy. And let's say that's using, GMX, GLP, the contract will be driving TVL into GLP, right? So it's kind of like a win-win situation. So our strategy or go-to-market strategy is first off kind of B2B or protocol to protocol, gone round. The whole of Arbitrum. I think we've got 35 to 40 partners that we're working with. They all get the pitch. It's something quite unique that we're doing. They're quite excited about what we're doing. So the first thing that we're going to do is then work on with a number of them to build, kind of co-create and collaborate to build some vaults with specific strategies using their products, which will be like our first rollout, which is coming with our V2. That's actually very, very close now in the coming month, maybe weeks. Really showcasing the power of what we can do at Factor and the flexibility and potential of the products of a number of our partners. Once we've done that, then we open it up. We obviously look to create awareness for the public as the next phase of the go-to-market. Yield marketplace, come and find the best yields that fit with your risk tolerance, build your own portfolio. Long term, we hope that means that we can onboard not only some big institutional level funds on chain, but also, a whole load of new people that can come and use DeFi in an intuitive and easy manner that's going to be productive and secure and profitable for them as well.
Thank you very much, Alex, BD lead at FactorDAO, for sharing more details about how to grow the market of FactorDAO and also telling us why partner with so many different protocols. And I wonder if Kurapika would like to add any additional information.
Nope, we're actually just super excited to come up with the V2 later this Q and to really allow all these building blocks to come into place. And again, with things like the V2 from GMX and from all the innovations that are available on Arbitrum and beyond to really be accessible to all the DeFi natives and new ones that join every day.
Brilliant. Thank you so much for sharing with us. And we are going to go to our round 4, which is to wrap up this session, also asking each of our project teams recent events and future plans as well. Next, we are going to bring the microphone to Zhang Zi from GMX. Could you please share any upcoming GMX V2 upgrade with us? Thank you.
I would be happy to, Moonlight. Thanks for the opportunity. I briefly mentioned V2 before, and version 2 of GMX will be a significant upgrade to the protocol. And it's easiest to describe it in contrast to GLP, our currently existing liquidity model. For example, with GLP, you have one single multi-asset pool where all the assets used for trading on the GMX exchange are in. Instead, with V2, we will have isolated pools for many more different assets. So we're looking at new untouched markets that we're currently unable to offer via GMX that will now be available. Those isolated liquidity pools will also have price impact contrary to the way GLP is currently structured. They will be balanced in terms of funding fees. GMX currently works with borrow fees, so it doesn't matter if you go long or go short. You pay a certain borrow fee based on the utilization of the asset you're borrowing. With version 2, that will change. You will no longer pay borrow fees, but you will pay funding fees. Now, funding fees is a fairly common mechanism that most people who trade perpetuals will be comfortable with. It's how most centralized exchanges work as well. It helps balance the open interest, and that's one of the aims we have in mind with this new introduction. Fees in general will come down on GMX version 2. We're looking to offer lower fees both on our spot markets and on the perpetuals markets. For those who have kept up with our recent announcements, you may have seen our big partnership with Chainlink. We are integrating their new low latency oracles as their launch partner, and we're very proud to be able to do that, because an on-chain perp exchange depends on oracles really to a large extent to offer reliable pricing. And I think when it comes to the oracle space, it's fair to say that Chainlink has the most expertise and is the leading party there. And these new low latency oracles really are an innovative step when it comes to on-chain price oracles, and will offer even more secure pricing and even more tick-by-tick based pricing, so that offers extra security, extra robustness to the protocol, and extra security for traders, which I think is also definitely added value for users. GMX version 2 will offer guaranteed orders. This is also a very important step. And when it comes to on-chain trading on a decentralized exchange, you're working with a blockchain. Blockchains can get crowded, when moments of peak hype, peak activity. Sometimes the chain gets congested and orders get backlogged a little bit. It can be very frustrating as a trader if your trade doesn't go through because the blockchain is slightly congested. Now, GMX version 2 has been coded in such a way that we can guarantee order execution. So that should be a thing of the past. And I think particularly for traders who migrate from centralized exchanges to the DEX space, it will be very attractive to know that you have the same guarantee of your order going through. It will offer limit orders, market orders, similar to how the GLP model currently works, but alongside guaranteed order execution. There will be even lower risk for liquidity providers on GMX v2 because of isolated LP markets, which I think is an additional attractive point for LPs on GMX. So we have a range of big changes coming with v2, and overall we're really confident that this raises the on-chain trading experience to the next level. And that it will offer great opportunities for not only our traders, but also for the protocols that we work with and the builders that build on our LP pools. So big things coming, and a lot of innovation taking place. And I think that we have our hands full in the rest of the year to fully figure out all the opportunities that GMX v2 offers, and together with our partners, make even more beautiful functionality for DeFi users on top of all that. So I'm very excited about everything that's coming.
Thank you so much, Jonesy. Yes, we're all very excited about the upcoming GMX v2 upgrade. Thank you for sharing. And next, we are going to bring the question to Timeswap's Amit and Mimi. They are co-founders and growth lead over Timeswap, and we also want to learn more about next step for the Timeswap project. Thank you. Let's see. I think I cannot hear any sound from our Timeswap guest speakers. Let me double check our backstage. Yes, I see that you are waving the hand, which means you can hear me, right? But yeah, well, the thing is that right now we could see that both of you are on the stage, but we cannot hear you. So my suggestion is maybe close this app and then come back again, and then we will bring you up to the stage. We'll circle back to Timeswap later. Okay. Okay, I see I see account is connected now.
Hey, can you hear me?
Yes,
awesome.
awesome.
Thank you so much. I think just got disconnected. So yeah, I think for Timeswap, we are essentially looking at expanding to the wider Arbitrum ecosystem to help other projects, let's say, list the assets in a safe money market, either for, let's say, leveraging, let's say, for the community, or even for, let's say, earning some yield against assets that they already hold. So overall, like pretty much excited to like work with other teams. I think we are soon going to be launching some new interesting assets, and then separately we are also enabling functions for, let's say, adding liquidity, creating pools permissionlessly. Plus we also have like an LM program coming up. So overall, quite excited to like over the next few months, like things that are coming up. And yeah, I think on a side note, like I'm a big fan of the OKX, like the app. I think both the wallet plus the app is one of the smoothest and like the best UX in DeFi. So yeah, kudos for that. And yeah, thank you for this opportunity.
Thank you. And how about Mimi? Does he wanted to also add any information? Actually, I don't see.
Yeah, I think he's got disconnected again. Like Twitter Space is dragging us again, unfortunately.
Yeah. Twitter Space really glitches too often.
Yeah. No worries.
We are looking forward to Twitter Space upgrade this quarter.
Yeah.
Okay, and next we're going to bring microphone to Eric. He's a product lead of Vaultka. Are there any future development or plans that you'd like to share with the audience? Thank you.
Sure. There's a lot of exciting news for Vaultka, and we have just completed our seed round fundraising of $400K US by 2VC, which is Merchant Venture and Raytheon Capital. We are very excited for the funding, and moreover, we have our two main products launching on mid-May, which will be a GDAI 3x leverage and a 3LP 3x leverage strategies. That will definitely provide a wider spectrum of products for our users. And better still, in mid-June, we will be our token launch. The token launch will be a tremendous use of governance utility. So we are excited. And in the future, in the long run, we will develop all LP strategies, as we have mentioned, and to create an LP index for with rating rebalancing. So this would be great for our users. And to tailor for their risk appetite and different products for them. And subsequently, we want to become the convex of perpetual DEX. So anytime people think of perpetual DEX, we will be the one to support their liquidity and to provide a value-added strategies for them. And eventually, we will also accumulate perpetual DEX tokens, such as like GMX tokens, Fella token, and etc. And ultimately, what Vaultka wants to be is to provide an all-suite service, such as a structured products and index to capture the entire value of perpetual DEX. So we are very excited, and we believe there's a lot of alpha that users can capture and to take advantage and use our products, and look forward to our future development.
Thank you very much for sharing the details with us, and we're all looking forward to the future development of Vaultka. Next, we're going to bring my phone to our guest speakers from FactorDAO, Leah Kurapika and Alex, co-founder and BD lead at FactorDAO. What is the upcoming event and also roadmap for FactorDAO? Thank you.
Yeah, thank you for the question. Yeah, because we're actually super excited because what's upcoming for Factor is really the full utilization of what Factor envisioned for its front-end implementation and liquidity management layer. So Factor is about to launch V2, which composes of several facets. First of all, and foremost, is Factor Studio, which we elaborated a lot on in this AMA, which really allows the different strategies to be used as components in the structure. So anyone can go in. And right now, we're really working with the partners to optimize the strategy based on their needs. For example, let's say Vaultka right now, they have their own vault structure and they have their own implementation of strategies, but they can now go and use the same implementation and combine it together with other features from other DeFi protocols that were not accessible until now, only maybe with complex elements or access or development integrations. Right now, you can just go in, do it in Factor, and propose the strategy, and by that, diverse your offering. So any protocol, any fund, and any individual can now go and diverse their offering by really create a strategy and offer it for active management. This is this Factor Studio, which we're really excited about, but we're also enabling further features like an SDK that will allow to build on top of Factor and use those facets in order to integrate them directly to a protocol and access all these integrations. Yeah, and we have a lot more coming up, and really about to release the testnet as well, and the documents that will outline everything I just mentioned. But yeah, we don't want to steal everyone's time. So Alex, do you have anything to add?
No, I mean, I think just to say, yeah, super excited about the V2 launch, and we've got a pretty strategic plan for rolling that out in the coming days and weeks. So definitely keep an eye out for that, for all the latest information in the run up to our launch.
That is great. Thank you, everyone. The time is 11:01 a.m. in East Coast America, New York City over here. Listen, Monglai, we're so glad to have